Welcome back to Investing with Confidence, sponsored by Online Trading Academy. 25 years teaching people just like you how to trade and invest. We are talking about the do's and the don'ts of the financial markets and how to have different strategies based off of this great opportunity that we're seeing in the markets right now. I am Josh Lilquist. If you happen to miss tickets to that investing class on the last segment, make sure to text in right now. Text the word investing to the number 210-210. That's text investing right now to the number 210-210 for 2 free tickets for the investing class and a quick start kit, which will help you get started right away. So, Al, in that last segment, we were talking about, with people trying to understand why the market moves and how and all that stuff, which we all know it really doesn't matter because it creates an opinion. And if people get emotionally attached or emotionally involved with the stock market. And so one of the things that we want to do as traders and investors, and it kind of reminded me, I was actually watching, I got a 5-year-old and he loves dinosaurs, right? And we're watching these dinosaurs and they're looking for the T-Rex, or they want to know where he's at because everybody's scared of T-Rex. And all you hear is boom, 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 right? You hear that footprint and that stomp of the T-Rex, the big boy out there, the guy that everybody is fearful of. And it just kind of got me to thinking about how the stock market works and how big money, the institutions, the companies that have a lot of, billions and trillions of dollars, they are like, they actually move the financial markets. It takes trillions of dollars and billions of dollars to move stocks or whatever that you're trading. And when they do that, they're leaving a footprint on a price chart, very similar to the footprint of the T-Rex, as I was giving the example. And what we want to identify as traders and investors is where are they buying and where are they selling? Just like if you're trying to hide from that T-Rex, you want to know where those footprints, which way they're pointing, and go the opposite way. So we want to follow those institutions, though. So I want you to talk a little bit about supply and demand and how institutions leave a footprint on a price chart and how us as everyday investors can trade like them.
I didn't plan on talking about dinosaurs today, but since you
It's
brought up the
always
T-Rex and you were talking about the stomping, what happens to something that gets in the way of the T-Rex? It stomps on them, right? And that's kind of what happens in the market. If you get in the way of the institutions, you may get stomped on. Why do so many institutions get fined for manipulation? Well,
Yeah.
it's because they might need to have that manipulation in place for them to benefit. And here's the important thing to remember. Wall Street institutions understand how the retail investor acts. Why is that significant? Well, the institutions own about 78% of the Russell 3000. They own about 80% of the S&P 500, and the institutions own about 70 to 85% of the top 10 companies in the United States. So because of that significant ownership, the major moves and the major market shifts are caused by them. So if they have such large ownership of these assets, someone has to be in the opposite side of their trade, right? And if those institutions never buy high and they never sell low, but that means that somebody on the opposite side of their trade is actually buying high and selling low. And if they're controlling most of the market and the retail traders are on the other side, they're doing exactly the opposite of what they should do. I think everybody would admit that you're supposed to buy low and sell high, but in reality, the retail trader, the public, does the opposite. And really, it just gets down to, you mentioned supply and demand. That's a financial law, really, that can't be argued. If there's more demand for something, price will go up, and there's more supply, something will go down. So if the institutions are investing billions of dollars in positions, that's creating a lot of demand. That is going to cause the price to go up. If they're pulling billions of dollars worth of something out of the market, you have excess supply. That's going to cause the price to go down. So if we know that the supply and demand is what's impacting the price of something, wouldn't it be important for you to understand how to identify that on a price chart? In other words, if those T-Rex financial institutions are leaving big stomping footprints in the market, which they are, why not learn how to identify where they are so you can take advantage of them? And that's what our students do. That's what our core strategy does. It really shows you, and in essence, what it's doing is it's showing you the right time to get into something, the right price to pay, and the right price to pay to get out. And that's the most important thing, is identifying the price at which something is going to turn and go the opposite direction. Those turning points in price always happen at increased demand or increased supply. In other words, increased buying or increased selling. The institutions are causing that. So all we're doing is we're just finding out what they're going to be doing and the way they have to trade. And we'll go into detail on this in these classes. The way they have to trade gives us a huge advantage because it shows us in advance what they're going to do, when they're going to buy, when they're going to sell. So we can actually be positioned to let them provide a profit for us. It's fantastic. Let them do all the work. Let them put all the money into analyzing things and all the sophisticated equipment. And then basically it's almost, not quite, but almost like them calling and saying, here's what I'm going to do tomorrow.
Wouldn't that be nice, right?
It would be nice.
Yeah, so you do need a strategy that's designed to follow them. And just as Al is talking about, these strategies, they're when institutions are moving the market, you just have to have that strategy that's designed and kind of like riding on their coattails. Very similar to kind of what you think about home prices right now, Al. You're seeing home prices right now start to drop.
They are.
Which means there is less demand, partially because interest rates are going up.
Sure.
But as home prices have been soaring for the past however many years, there was so many people going out to get these homes, and there was little inventory. That's what the realtors like try to sell everybody on low inventory, and they create this craze. I believe the realtors created this frenzy in home buying. But it's very similar in the home market as it is in the markets, the stock market. So just having that strategy that's designed to follow them in these workshops, we're able to show you some of these different things and what it might look like in this investing class. By the way, these are free, and it's how to get in and out with the institutions and not against them. And so you just need that strategy that's designed to do that. So if you want to come see how that works, how supply and demand works in the financial markets, we have these free investing classes. We've been seeing a lot of people come to these, Al, and I think we're seeing more and more people, I guess, be more aware of what's happening in these markets and want to participate. Some of these great opportunities you do not want to miss out on because they are happening every single day right now. So text right now for 2 tickets for the investing class. Text the word investing to the number 210-210. That's text investing right now to the number 210-210. And this is for 2 tickets, one for you and one for a friend. Investing to the number 210-210. So Al, once you understand how the market works, how to follow the T-Rex, right? How to know where the T-Rex is going, where they're leaving those footprints, which is be the institutions. You have to have different strategies based on your goal or objective. And we're seeing a lot of people right now that are coming to these investing classes want extra income strategies. Because if you think about it, that's how you build wealth, is having more than one source of income. So it's just, what strategy are you going to use? Is it a strategy of a second job? Or is that a strategy of a third job? Or is it a strategy by using the market? Because I'll tell you right now, the market is available to everybody as long as you have an internet connection. And you can do that from home. And I think that's one of the great benefits of having strategies with the market, is being able to do it at home and still have time for your families. Talk about those income strategies, but also those assets that a lot of people are using for those income strategies.
Well, you mentioned building wealth, and that is something I think that everybody should have as a goal. At some point in time, your income from a job that you have or jobs that you have will be gone, and you're going to have to rely on something else, and that's that wealth that you build up. But how do you build up wealth? Well, the wealth buildup comes from an overflow of money you have after you have paid your bills, with the income from your job. After the bills have been paid, after you've enjoyed maybe some traveling, some vacations, helping your kids out, whatever it is, but there has to be enough left over to put into your wealth, let's call it your bucket, your wealth bucket. If you don't have that extra income, that bucket's not going to be there. Maybe you have a 401k and you have some an employer that's matching part of what you put into it. That's free money. That's fantastic. But you still have to put money into that 401k. So again, it's extra money that is left over after you have paid for the cost of being alive, because as we all know, it's not free. So income, I think, is really the most important component of your financial life to concentrate on, to learn about, because you'll use it as your as you're gathering assets, as you're kind of in that work gathering or asset gathering part of your
We'll
life.
call it accumulation, Al.
Let's call it accumulation because that is the correct word. Thank you.
I'm just here to help you out once in a while.
Well, I appreciate that. I need all the help I can get sometimes.
We can get a dictionary out and just keep that out all the time if you want.
You really have it? Do you have a dictionary?
It's
I
online.
haven't
Everything's
seen.
online.
Yeah, I know,
It's
but I
all
haven't seen
online.
a physical dictionary for years. But anyways, building wealth is important, but you need that income. And for a lot of people, unfortunately, they only look at having an additional job or working overtime as their source of income. Or you see a lot of people lined up in convenience stores right around, lottery time. And so for some people, that's their strategy. By the way,
Mhm.
not a very good one. But there are assets you can use, financial assets that are really perfect for generating income. Whether you're still working, whether you're in that asset accumulation phase, or if you're retired, use those same assets, those same strategies in retirement. We're talking about something that is short term. Unfortunately, most people, even if they go into a financial advisor and say, my goal is to have income now, extra cash, almost always they're put into something that really is more ideal for long-term buildup. And if you need additional cash, you can't, accept something that you're supposed to hold on to for 10 or 20, 30 years. So the assets that you can use are short-term in nature. And the great thing about them is not only are they short-term, but they have leverage. You kind of mentioned the housing market before. One of the reasons that the housing market was on fire was because interest rates were so low, people could get a mortgage, low rate mortgage, and then own a very expensive investment, that home, for a much lower upfront cost. You can do the same thing in the financial markets. Use leverage. You can use the futures market, the foreign exchange market, the options market. If you don't know anything about those markets, don't worry. That's what we do. We teach you about them. We talk about what the benefits are. If you believe or you have heard people say that they're too confusing, you're not smart enough to do it, you need a lot of money to do it, those are all fallacies. They're just things that you haven't been exposed to. And in the classes, we talk to you about why that is the case. But for the most part, it's because Wall Street doesn't want you to know how to use those things. It's too much work for them, for one thing. And once you learn how to use those assets properly, you really don't need them. And that's what they need. They need you to need them. So if you can use an asset or learn to use an asset that generates that income for you, and you can learn how to do it consistently and potentially successfully, then you don't need to pay somebody to put you into a strategy that is not short term.
Yeah, and I think just a lot of our listeners probably don't understand. I want to make sure they do understand is these strategies that Wall Street are using every single day, they're available to us. These assets are also available to us. And as long as you have an internet connection, and you need a little bit of capital, but with the leverage, you don't need as much capital as you would with the stock market.
Right.
So that's one of the great benefits with these leveraged assets. Another one, most people, I know I've been talking with a lot of people and they work during the day. Well, if you had a strategy at night, well, these markets are open 24 hours a day. So they're open round the clock. So
Right.
you have the opportunity to trade and invest at night. I mean, you think about this, the currency market, the Forex market is called the foreign exchange market. This is a world market. This is what facilitates international trade and investment. Huge opportunities. It's actually the largest market that's out there. The futures market, that's your gold, oil, silver. My favorite, Al.
Lean hogs.
I think that's the first time you've actually got to say that. I asked you
Well,
about it. Even.
thanks for sharing. I
Yeah,
appreciate
you get to
that.
do some of the fun.
Yeah.
But these opportunities are we're seeing huge opportunities every single day. So if you want to learn more about these other assets to utilize your capital wisely and be more efficient with that, we have these investing classes. They're free. Al teaches these. I teach these as well. So if you're listening, text right now, investing to the number 210-210. That's text investing to the number 210-210. This for 2 free tickets, one for you and one for a friend. Al, coming up next, I do want to talk more about that wealth building like we were just talking about, how it takes multiple sources. Because I think just a lot of people are just not where they need to be for retirement. So how to build these accounts in your working years to have those golden years of retirement. Check out the podcast on Apple Podcasts, iHeartRadio, and Spotify. This is Josh and Al, Investing with Confidence. We'll be right back.